India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Thursday morning, going towards the end of the week, and it's getting a little interesting. Not a big change as far as global markets, US equities, especially here in India. We seem to be at a bit of a crossroads. So lots to track. I'm Prashant. With me, my colleagues are Nigel and Survey. Guys, good morning.
Hi, morning. Counting down to the weekend, so we've just got 2 more sessions to go. But so much happening, right? Overnight on Wall Street, so many announcements, so many news reports, and never a dull moment. But for us, we have to see what our bulls can manage.
Well, and today it's going to be the start of earnings, right? The big one comes out later today. TCS, there's a lot of expectation. The stock price told you the story yesterday as well. Let's see what they can deliver, because tech is one space that the street believes will outperform towards the end of FY25 and FY26. So that's going to be the big cue today. Well,
and the markets will react maybe, actually not today, but maybe tomorrow. Because the numbers are expected last hour of trading, towards the end of trading. Well, let's just quickly run you through the sort of setup as things stand right now. So, I'll start with the basic change, which is actually mixed. If you look at equities, not very much, right? Absolutely mixed. One index up, one down, but hardly anything. The thing is, tonight, basically, a Thursday for the US is a stock market holiday. It's stock markets, NYSE, NASDAQ, they are shut tonight. And then bond markets are also closed. So in a way, markets last night were also sort of reacting to that, which is a closed session, which is a no-show, no session. And then, of course, Friday, that is tomorrow, you'll essentially get straight into that NFP, the monthly jobs data, which is an important one. So gets a little tricky. Now, S&P on your screen, NASDAQ kind of slightly lower, but flattish. 10-year yield unchanged, 4.69. But the 20-year, the longer end of the yield curve, big move, right? The 20-year yield rose above 5%. And by the way, in a way, this kind of mirrored what happened with the gilts in UK, bond markets in UK, where we saw a very sharp move. I mean, if you look at the pound, there was a 1% crack. Now, these are all largely related to government spending, debt deficits, etc. But that's another conversation. But it's interesting that here in the US as well, the longer end moved much more sharply than the short end. The dollar index, it ended above the 109 levels, and I think emerging market investors won't ever like it. It, by the way, got to about 109.5 and then kind of pulled back a little bit, but still 109 once again on the screen. Oil prices a little lower, $76 a barrel. Just a few sort of news items, data, whatever you want to call it. You had the minutes. Now, Fed pricing is coming back, and we said this yesterday as well. Fed pricing, and what the Fed will do is once again sort of square and center. And this was the big talking point through the last 10 days of 2024 as well. And there's been a big shift since the last December FOMC meeting. 2 cuts in 2024 as opposed to 4. Some were talking about 15, 20 days ago. And of course, the minutes last night kind of echoed that as well. They basically said that expect a very careful policy approach from the Fed in the coming quarters. Those were the minutes. Now, there was another news item. CNN, the news channel in the US, reported that Trump is considering a national economic emergency declaration. This is just to justify universal tariffs on friends and sort of, enemies alike. So this is, in a way, kind of supportive of the argument that big-time tariffs perhaps may be coming. After NY close, you had the AI and tech sort of stocks which came under some pressure. In his last push, Joe Biden, the current US president, is trying to curb NVIDIA and AMD from exporting AI chips. So we'll see if there is an implication for that sector, but not very much exposure here in India. It's in markets like Korea, etc. Now, just to tie in the levels, and I said we are in a bit of a flux. A resistance for the Nifty. We by the way, closed where we started yesterday. 23,700 was the start. Low was 23,500. We left off at about 23,700 once again. Almost 23,700 by close. So resistance comes in at 23,755, which is the immediate 40 hourly exponential moving average. and 23,813 is the next resistance after that. That's a Bollinger Band level. Support comes in, which is the low of 31st of December, which is 23,460 for the Nifty. For the Nifty Bank, resistance again is the hourly average, which is 50,011, and then the 40 hourly, which is both hourly averages for 50,418. So these are the two immediate resistance for the Nifty Bank. And since the Nifty Bank made a new low, lower than what we saw in December, that becomes the support, which is 49,390. That was the sort of new low, which was set in this recent move yesterday. So that's up on your screen. GIFT Nifty will come up on your screens, and I think it gives you a sense of how we start. 60, 63 points lower. Remember, I want to say this. You've got two very important events lined up over the next 20 days. One is, of course, global, which is the Trump inauguration. And then I think you've got the union budget. Now, whether, something will come out of the budget is another matter, but we can certainly expect a lot to come after the Trump taking over, which is the 20th. I mean, I think we can already see that in terms of how rates in the U.S., rates market in the U.S. is actually behaving. So a slightly softer start to begin today's session. Surabhi.
Absolutely. Market's not feeling too great because of those twin factors. The fact that, you're probably expecting lesser rate cuts in the U.S., and that's what the minutes indicated yesterday. And the CNN report, that also caused a bit of a flutter because that report actually came out before U.S. market trading began, and it started showing up in the currency and the yield markets early in the evening. This possibility of Trump using IEPA, which is the International Emergency Economic Powers Act. So let's see. I mean, I think all options are still very much on the table. And a lot of the hopefuls who are expecting that, this is more bark than bite, perhaps, can't say that conclusively at all at this point in time. So, like I said, the reaction was showing up in the currency and the bond markets early on. And that's when the U.S. 10-year yield had topped 4.7%. Subsequently, it retreated. But even then, with the whole rate cut situation, plenty of leg up. U.S. dollar obviously has been above 109 once again for the better part of the overnight action. In Asia, markets are feeling the heat. So the color is predominantly red, barring the Hang Seng in Hong Kong. Most Asian markets are actually lower, whether it's Australia, whether it's Nikkei, whether it's Singapore. Markets are down. The additional data point that we have in Asia today is the inflation print in China. And that's telling you how weak the economy is. Because if you're looking at the consumer inflation number, the pace of increase has slowed down even further in January. It's just 0.1%. That's the increase in consumer inflation versus 0.2% in the previous month. And at the producer level, prices are contracting. Producer inflation in China has declined 2.3%. So and this is, I think, the 27th month in a row that producer prices are in deflationary territory. So all the talk of stimulus, the measures, etc., clearly not showing up in inflation. Okay, so that's the global picture. Talking about the domestic picture, it's the same story, the same song that we sing on a daily basis. This FPI selling, no let up on that. Yesterday's number is a net sell number of 3,360 odd crores. Domestic institutions were buyers. Remember, there is a domestic mutual fund data coming out today. We'll track it very, very carefully at around 12 o'clock to see if the retail, inflow of money continues to be as strong as it has been. But that FPI number continues to be disturbing. Earnings season kicks off today. So TCS expectations are very, very muted, actually, if you're looking at top line growth. Dollar revenue could actually decline by 0.6%. This is because of the cross-currency sort of impact. In constant currency as well, are we talking about growth? Well, hardly 0.2%. Though the street expects, Rima's poll said that the margin picture could be improving, maybe a 40 basis points improvement in margins. The commentary is going to be far more important. Let's see if the management guides for more confidence in the US market or not. So that's TCS, but TCS is not the only one. There's Tara Alexi, there is IRDA. So basically the season kicks off in full bloom today. A couple of other important news points, and we'll tell you more about these stocks as we go along. Lupin could have an interesting session because they've got the establishment inspection report for their Pithampur facility. This has been a long-standing issue, and the action is VAI, voluntary action indicated, which is not as severe. Watch out for that. And of course, Manappuram, you would have heard the news. I mean, it's been all over since last evening. The restrictions on Asirvad, the MFI, have been lifted. So what does that mean for the stock in the company? We'll tell you as we go forward. But first, we have to deal with these global cues, Nigel. They don't look too good.
Well, that's right. And today will not be short of action because we have the expiry that plays out as well. So that's the added element. But as you all said, overnight, those three big indicators, they continue to remain elevated. And the hope is maybe the dollar index peaks out before President Trump takes over presidency, because it's been very, very strong. And there's a lot of rhetoric that's, that we're hearing about. But the hope is that maybe that 109.5 odd does hold out. So that's going to be an important point. The other two as well, continue to remain a little bit higher, though Brent crude prices, if it's below $80, $85 per barrel, well, the Indian bulls will be very, very happy on that front. What did the FIs do in yesterday's trading session? Well, they added shorts yet again. Close to 19,000 short contracts is what they added, which is way more than the long edition. And I'll tell you what, when they add some shorts, it's not such a bad thing because you're not getting follow through on the downside. So you'll want the recent low to get protected. How are they stacked up right now? The FIs, well, yesterday they added some short positions, as I said. So net shorts went up for the FIs. And the clients, well, they are adding long positions. And yesterday there was close to around 30,000 contracts that they added on the long side. Both of them on opposite ends of the spectrum. But since, the stock futures have been something that we have been talking about, let's do a quick check of what they did out there. The clients, after a small break, they went ahead and they added long positions yet again on stock futures. Last couple of sessions, they were unwinding some long positions out there. So they added some longs yet again. While the FIs, they took a bit of a break. Not to say, but they continue to remain net long on stock futures, both the clients as well as the FIs. So that's telling you stock-specific action will continue on that front. There are various stocks that will do well. The options data is important since today these contracts will expire. 23,700 call, 23,500 put, both of them were fairly active. And just punching in those levels, those numbers, you get the levels. So on the upside, 23,800, that becomes a bit of a resistance mark that you're looking at. This is just for today. The near-term resistance going by the options data. While the reference point on the downside is the recent lows that we have made. So 23,450 to around 23,500, very, very important mark on the downside. The Nifty Bank is the problem pocket. Even yesterday, it was a bit of an underperformer. And all of the last few days, it's making lower highs. So today, if you want to look at a level, this is the level you should look at on the upside. You'll want the Nifty Bank to actually make a high higher than what we saw yesterday. Because on a day-to-day basis, it's making lower highs, which isn't very, very good news. So the Nifty Bank needs to get its act together. And finally, if you're looking for support, yesterday I pointed out that Reliance Industries could be the stock to watch. I think ITC is coming into its own. Yesterday, it made a low of around 435. The stock then, in fact, did see a big bounce. There's a fair bit of delivery-based buying that we saw. And we also saw some long build-up as well. So that's the one that I'll keep an eye on. ITC at around this 440, 445 levels looks interesting. All
right, Nigel, thanks very much for that. Well, let's quickly run you through some of the commentary which is coming in as well. Harold Van Linde of HSBC says that after annualized growth of 25% in recent years, profits appear to have softened while valuations are elevated to 23 times forward earnings. As earnings disappoint, consensus has cut FY25 growth expectations for Nifty from 15% to 5%. Investors are likely to reevaluate their positions, limiting market returns, and hence they downgrade India to a neutral rating. That's the view which is coming in. Marco Papik is joining us, Chief Strategist at BCA Research. Marco, good to have you with us here, back on the program here. Thank you for your time. Appreciate it. Just starting with something new, Trump and tariffs seem like, we hear something every day. But last night, the 20-year in the US went up above 5%, early in the New York trade. And you had significant volatility in UK markets, UK rates market as well. Gilts, etc. What's going on? It's not too far, back here to go to see that episode where, bond markets in UK, we saw a real big move. And there was a threat of it spreading to global markets. It did not. It was limited to UK, but it was pretty significant. Are we likely to see a repeat of some of that?
Yes, I think so. I think that there's more room to the upside on the 10-year yield. And I think the reason for that is not tariffs, it's fiscal policy. It's the fact that President Trump is coming in and proposing to expand the U.S. budget deficit quite a bit, add quite a bit of tax relief, which would, of course, boost growth, but also would expand the deficit, expand the supply of treasuries. And I think that the bond market is effectively having I don't want to call it necessarily like a riot, but it's definitely not happy about it. Now, you could argue that the rise in yields reflects higher growth rates from the U.S. economy, so it's not necessarily pernicious. But I don't think that higher rates, which reflect higher borrowing rates, are going to be good for the economy. They may be reflecting a reality of the past 5 years, but the past 5 years has been underpinned by more fiscal support, and that support is going to dissipate. And so I do think that President Trump is going to ultimately have to succumb to the pressure from the bond market and temper some of his fiscal promises, specifically some of those promises outside of extending the 2017 tax cuts, such as removing taxes on tips or taxes on Social Security, some of the campaign promises that were associated over the past 6 months with his campaign.
Marco, hi. Good to have you on the show this morning. You know, on tariffs, I'm just wondering if they do come through, because yesterday we had that CNN news piece, right, that maybe Donald Trump could be using some sort of emergency powers to go ahead and impose whatever tariffs he wants to. When that news comes in, is it going to be a big knee-jerk for equity markets, or do you think markets have somewhere priced this in? Because look at December, the last 1 month or so. Even the S&P 500 is flattened out. Markets are off the November euphoria. So what are we in for if some of these tariff announcements do start coming in, as he's been saying for the last many months?
Well, you know, he's been saying a lot of different things. And we've also had different reports. Like on Monday of this week, you had a Washington Post report saying the tariffs would be limited. So dollar went down 1%. President Trump countered that report. And then today we had a report that he's going to use basically announce an emergency, a national emergency, and raise tariffs across the board. So he's also been saying different things during the campaign. On one hand, he's been saying tariff is the most beautiful word in the English language. On the other hand, he's been saying there will be no tariffs because companies will just move production to the US. My framework for tariffs is this. If tariffs are put into the reconciliation bill that will cut taxes, if they're used by US Congress as a legislative tool to raise revenue, you should worry about tariffs. Why? Because they're going to be permanent. And President Trump cannot remove them. If some country says, hey, okay, fine, we'll move some of our manufacturing to the US, can you please remove tariffs? He can't do it because they will be part of US law. So again, if tariffs are used in the legislative process to raise revenue in this reconciliation bill, as we call it here in the US, that's going to be very serious. If tariffs are imposed through executive order by President Trump, it doesn't mean that they're not a tool of negotiations. I mean, he has to create a credible threat in order to bring countries to the negotiating table. So he will have to raise some tariffs. I think this is, there's no world in which no tariffs get imposed. But if they're imposed through executive order, they can also be removed. In other words, it's part of the negotiation process. And I would remind investors, I know it's a long time ago, but Nixon raised tariffs 10% across the board in 1971 during the Nixon shock. He wasn't just removing the country from the gold standard. And he did so in order to negotiate a currency deal, which ended up being the Smithsonian Agreement. Similarly, Ronald Reagan threatened across the board tariffs. Now, he didn't actually implement them, but he also negotiated a currency deal that saw the dollar depreciate under the Plaza Accord. So I think that President Trump is doing something very similar. He will be imposing tariffs with the intention of getting deals back from other countries. And so what I think is the likely outcome throughout 2025 is not so much equity moves. I wouldn't be focusing on that. I think eventually this year we will see the dollar peak. And that's something that, you were also mentioning on the program just earlier before I came on. The dollar has likely peaked at some point this year. There's probably one more leg up as these tariffs get implemented. And then as the negotiations begin and we start seeing other countries offer some concessions, I think you will see dollar peak and us reach probably DXY 110, 111, and then go back down.
All right. Hi, Marco. Good morning. Yeah, that's the point that I made. The hope out here from the Indian equity watchers is that the dollar index has peaked. So let's hope that does play out. But tell us, what's the approach to equities? You're sounding a little bit cautious for global equities on the whole. And as we chatted last time around, I think you said stick to the US, stick to Trump. The US market is likely to outperform. Do you hold on to that view? And what about India? We have had a decent run, but we've gone through a phase of consolidation for the last 6 to around 8 months. Your view on the Indian markets?
So yeah, first of all, I would say on the US, that's a very tactical view. I think that tactically speaking, there's just too many risks coming up, specifically with tariffs. I would also bring to that geopolitics. I think Trump is going to be very, very tough on Iran. We could have a pretty significant geopolitical risk in the Middle East over the next quarter as well. However, I do think the tariffs are tools of negotiation. And so by mid-year, you're going to start seeing two big stories play out. First of all, a peak in fiscal policy in the US. President Trump will not get what he wants in terms of fiscal outlays. So US growth expectations will actually have to come down, which may bring more Fed cuts back into the equation. Again, not right now, middle of the year. And then I think by middle of the year, maybe Q3, we will start realizing that the tariffs he implemented on January 20th through that IEEP are actually just a tool of negotiations. So I think that the dollar and U.S. equity outperformance will probably end in Q2 or Q3. So stick with U.S. for now, but I think come Q2, come Q3, we'll have a very interesting entry point for non-U.S. assets, and that includes India. And I think that India is going to do quite well once we clear these hurdles over the next quarter or two. So again, what we need is a realization by the market that U.S. fiscal policy has peaked. It's going to take some time, and that the risk on tariffs has peaked, which will take some time.
Right. Marco, just very quickly, we heard from President, you said Trump, incoming President Trump was saying a lot of things, and he did say a lot of things. Canada, Gulf of America, Greenland, the Panama Canal. I mean, are there any way all of this impacts markets or not at the moment? And what do you make of it?
I think there's a couple of ways to look at it. First of all, I think we should take it seriously. If you say something X, let's say you say something that's 10 times worse than anyone expected. It's probably not going to happen, but something 5 times worse might. In other words, once the narrative has expanded to like invading Greenland or Canada, that will likely not happen over the next 4 years. I mean, I can say that confidently, but something that was still unexpected might. So the narrative has clearly widened in what is appropriate. And so that's the first issue. And I think that one of the things that President Trump, might not care about or doesn't realize is that while when he says those things, they may not happen, other countries are listening. And he might be opening a Pandora's box where somewhere in some part of the world that's been peaceful for the past 20 years, some leader says, well, if President of the United States can say this, then I can act on it as well. There's a lot of irredentism out there. There's a lot of border disputes. And so I would say that that's how I would look at this as perhaps mattering in the long term. But I think in the short term, you should not expect this to move markets.
Well, Marco, I think markets will just hope that he says whatever, announces whatever, but at the end of the day, comes back home to see what's Wall Street doing. And if Wall Street starts faltering, then he very quickly tweaks whatever he's saying and whatever policies he's outlining to suit Wall Street. I think that's a big hope that I was reading that a lot of money managers have, that ultimately he'll do whatever it takes to keep the stock market happy. But we'll see. Prashant.
We should actually have. There's so many memes now. These serious issues. But I saw one. Marco, I don't know if you saw it. There was President Trump in Greenland, obviously a morphed picture, all snowy background. And it's a take on his book, The Art of the Deal. And he looks at the snow and he says, well, it's not even green. Knock the price down 20%. I mean,
my favorite, if we're talking about memes, and if we have time, my favorite, I don't know if you are fans of the board game Risk. But in Risk...
I've played it, but yes, go on, please.
Yeah, so in Risk, you get extra troops every turn if you control a continent. And basically... there was a gentleman, very smart gentleman on Twitter who said perhaps he's just trying to complete the continental combination by controlling, North America. But listen, I think one thing, if you want me to give you a silver lining here, if the President of the United States of America, no matter who it is talking about annexing Greenland, it's because there's nothing else bad going on in the world. So if you want a positive story, just put it that way. If we're talking about annexing Greenland, it's because none of the geopolitical issues that are out there are actually rising to an extremely high level. And I would just argue, let's not, wish for some other conversations.
Sure. Love the optimism, Marco. Hopefully that's what it's all about, that the rest of the world just goes on peacefully so we can kind of drum up some interesting conversation. But anyway, I'm sure we'll have many more chats as we get to the 20th of January and beyond. Thank you very much for being with us on the program today. Well, that's the global backdrop, and there's never a dull moment thanks to Mr. Donald Trump. But let's come back home and see the corporate interactions and the market commentary that we've lined up for you. At 8:35, we will be in conversation with the management of Ashiana Housing. They came out with a very strong update. The stock was rallying 6-7%. So we'll get you more details on this today. Then we'll be talking to Alok Mishra of MFIN to talk about the stress in the microfinance sector and this much talked about meeting that happened with the Department of Financial Services yesterday. At 9:20, we talk markets with Atul Suri. What are the indicators saying now? What are the longer-term charts and trends suggesting? He's a market master of the day. And on fundamentals, we have Vikash Kumar Jain of CLSA joining in. Look at their 2025 forecast for the Indian market. After that, we get into conversation with Rajat Kathuria of Signature Global, again, a real estate company that came out with a Q3 update. So we'll find out how trends are looking like. And at 9:50 a.m., Horma Sarabji of Autocar India as well as Jay Kale of Elara Capital will join in. Plenty of chatter around new EV launches. Mahindra & Mahindra, of course, announcing pricing of their new variants. Maruti seems to be sort of getting its act together for 2025. So this is what we discuss as we go forward at 9:50. And finally, in our special segment, it's the economy. Lata will be in conversation with Anish Tawakle of ICICI Prudential Mutual Fund.
All right, time to slip into a short break. On the other side, we'll focus on all the stock-specific action in our special Top 10 segment. We'll look at Manappuram, Lupin, Borosil, Renewables, Tata Motors, PN Gadgil Jewellers, Zentech and Anand Rathi. All of them will be reacting to positive news flow. On the flip side, Credit Access Grameen, Hindalco, NMDC will be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these names. Don't go anywhere.
Welcome back. So markets across Asia are pretty much red. Japan's down about 0.7%. Shanghai is down about 0.25%. The Hong Kong market is the only one that's a little up in the green. So we're expecting a cautious start for us here as well. But what about individual stocks? We have a team standing by with the CNBC-TV18 list of top stocks to watch. Let's kick it off with Manappuram. Abhishek, finally some good news coming in for Asirvad MFI.
Well, all the four NBFCs wherein the restrictions by RBI was placed on 17th of October 2024 has now been lifted. So RBI has lifted the supervisory restrictions that they had placed on Asirvad Microfinance and DMI Finance. So Asirvad Microfinance is an NBFC, is a subsidiary of Manappuram Finance, who holds about 98% in the company. And with this restrictions being lifted, it would act as positive catalyst for Manappuram. Back to you.
Absolutely, and I think important to take on board this news flow, especially with regards to implications for the company, listed entity. Now, Lupin should be in focus, and so should be Borosil. Vivek is standing by with details. Vivek, morning.
Well, good morning. Positive news flow coming in as far as Lupin is concerned. Now, this is regarding the Pithampur unit, an important facility for the company. So, after the inspection that was carried out in September, remember the company had received 6 observations, 3 observations each on the API as well as the finished product side. So, the company was awaiting the classification from the US FDA. So, the company has now received an EIR, which is an establishment inspection report, and the kind of classification that they have received is a voluntary action indicated, which indicates that the majority of the issues that the site had have now been resolved. So, it's a positive development as far as Lupin is concerned. Now, coming to Borosil Renewables, the long-awaited capacity addition that the company had put on hold or had deferred is now back on track. The company has announced a large expansion of close to 50%. This is in the manufacturing of solar glass. So, the manufacturing capacity of the company will now increase from 1,000 tons per day to 1,500 tons a day. And the main reason that the company has now found the confidence to go ahead and increase the capacity is the minimum support price that the government has introduced as far as import is concerned. Interesting development. Expect some green on both of these stocks today.
Okay, thanks a lot for that, Vivek. Well, let's hop across to Hormuz. He's here to tell us about Tata Motors. Hormuz?
Nigel, morning. And Tata Motors, the JLR retail sales numbers is what it'll be reacting to. The retail numbers were down around about 3% for the quarter, 1.06 lakhs unit, but the improvement came in the wholesales, and that improved by 3% to 1.04 lakh units. And these, the wholesale volumes improvement reflects the fact that there has been some turnaround after the supply disruptions that were seen in the second quarter. Mind you, Tata Motors as a stock has already corrected by a third from its record highs, so expect the stock to open in the green post this.
All right, so Tata Motors is going to be on our radar as well. Thanks very much, Hormuz, for that. Let's go back to Abhishek. Abhishek, so you were alerting us about this meeting, DFS meeting with a lot of MFI and fintech players. What's the latest?
Well, we also alerted that there may not be a major outcome with respect to what the industry has been demanding with the, defense secretary, and that's exactly been the case. So the DFS SECI meeting outcome for the MFI lenders is that MFI should draw a roadmap with respect to strengthening the sector and become more viable. MFI should encourage repayment of loans digitally, and MFI should focus on cyber security and resilient IT infrastructure. Now, MFI should also strengthen the governance strength, standards. So, over leveraging should come down is what is indirectly meant by, governance standards, and indirectly that's being meant by them. So, there's not much relief with respect to asset quality or funding, that's been asked by the lenders to the secretary. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, I'm looking at two stocks in the metals pack. One is Hindalco and the other one is NMDC. And both of them could start off in the red. They'd start off in the red. We'll see what goes on from there. For Hindalco, Novelis has released their provisional numbers for the past quarter, and the numbers look quite weak because you have the adjusted EBITDA that's coming at around $360 to $370 million. The volumes at around 900,000 to 910,000 odd, which tells you that the calculated EBITDA per ton will be around $400 to around $407 per ton. Now, these provisional numbers look weak. The reasons that they've given is we know that scrap prices have been moving up, and because scrap prices have been moving up, spreads will get compressed. So that's point number one. The second factor is the product mix. Lower amount of auto sales, that's what's going to hurt them as well. So both these two factors will weigh on them. But however, the stock, after starting off in the red, I expect there could be some kind of bottom fishing. Why is that? Because the stock has corrected 24% in the last 3 months. That's post their quarter two Novelis numbers when they said that they're suspending their guidance. So that's when the street got a little bit jittery. So the stock has already corrected 24%. And the management is saying come quarter four, it could look like quarter two, which effectively means it could be in that range of around $480 per ton. That will compare with around $400 per ton. So because of both these 2 points, I'm expecting out of the stock to start off in the red, to see some kind of bottom fishing and close maybe closer towards the green line. So that's the first stock. The second one is NMDC. A few days ago, we had told you about the operational update, which looked very, very weak. And I had mentioned at that point of time as well, because of this weak operational performance with regard to the offtake, there's a possibility they go ahead and cut prices. And effective today, they've gone ahead and cut prices by 350 rupees, both on lumps as well as on fines. And the street really had sniffed this post that weak showing. So why have they cut prices? One is because global prices have corrected by close to 8 to 10%. Second factor is because the operational performance was so weak. For December itself, the sales offtake number was down by close to around 7%. So that as well starts off in the red. Maybe we'll see some kind of recovery because the street was anticipating a price cut, and maybe 350 rupees per ton is par for the course.
Okay, all right. That's NMDC. We're going to watch out for this one, and of course, the impact on Hindalco as well. But let's talk about the jewelers. Most of them have come out with glittering updates for the third quarter. What about PN Gadgil? Mangala, morning.
Well, no different from the glittering updates that we've got everywhere else as well. But if you just look at it at a percentage basis, maybe, it may not be as big as, say, something like Kalyan Jewellers or maybe Titan on that base as well on a consolidated basis. But they have been growing slow and steady itself. 24% revenue growth is what the company has reported on a consolidated basis. The good part is retail revenue has actually grown 42%. And unlike other jewelers who are seeing gold see further traction, PN Gadgil, because of the low studded ratio, has actually seen diamond sales grow by 40% as well. Remember, they had a plan of opening 12 stores in this financial year. They've opened 9 in this year so far already, with 3 more in the fourth quarter. So see some green on PN Gadgil. But remember, jewelry stocks have been abuzz ever since the start of the third quarter on hopes of strong performance coming in on account of the festive and wedding season as well. And this one, no different.
All right. Mangalam, thank you very much for that. More stocks with news flow. Hormuz is standing by with that list. Hormuz, morning.
A couple of stocks on our radar, Prashant. Morning to you as well. Zen Technologies is one of them, and they've been granted an Indian patent for a T-72 containerized crew gunnery stimulation system, and this is their 11th patent that they have received in FY25. And this is also an advanced training platform that is designed to enhance the gunnery skills of the T-72 tank and the other gun equipment systems. So positive news coming in there for Zen Technologies. May open in the green, but may also be in the price as well, because the stock over the last 12 months has already tripled in value. It's up over 220%. So keep Zen Technologies Technologies on your radar, and the other one is Anand Rathi Wealth. They made an announcement yesterday evening that they're going to hold a board meeting on the 13th. They'll consider a bonus issue along with their third quarter results as well. The first issue of bonus shares after their listing, which was in December of 2021. And the stock here as well, it's been an outperformer in line with most of the other capital market linked names, up 7x from its IPO price of 550 and in almost a 3-year time span. So expect Anand Rathi Wealth to open in the green as well.
All right, got that. Thanks very much, Harmas, for the details there. So let's quickly recap the list that we have for you today. The stocks that have positive news flow around them are Manappuram Finance, Lupin, Borosil Renewables, Tata Motors, PN Gadgil, Zentech and Anand Rathi Wealth. The ones that could maybe open out in the red, Credit Access Grameen, Hindalco and NMDC. Okay, so that's the stock list for the morning. What about commodities? We've got Manisha standing by with a roundup of all the overnight action. Manisha, good morning. So what's new? What's the latest?
Thank you for that, Sylvia. I'll start with the crude oil prices, where we did see 77.5 in terms of Brent prices yesterday, but the prices have come off those 3-month highs, and we are trading below $77 a barrel as of now. Well, the strength in U.S. dollar index seems to be weighing, and so is the thing that the U.S. crude inventories have seen a decline for a 7th straight week. The markets also seem to be reacting to, in some sense, to the U.S. FOMC minutes that came in yesterday, where the U.S. officials emphasize on cautious approach. The future rate cuts, they say, will hinge on clear economic indicators. So that's a bit of an uncertainty, and that has led to a decline in crude oil prices. Gold also saw some decline. Silver seems to be holding firm. But the best of the gains within the metal as a sector has come in from copper prices. 3-week highs, 2% of gains in the overnight market. And this is a space that is expected to, or rather, copper is expected to lead the metal prices in 2025, is the report that's coming in from various banks and brokerages.
All right, Manisha, thank you very much for that. So commodities in a bit of focus. Of course, I mean, the big rise in the dollar that we've seen last night perhaps also takes a bite out of any expectation that stocks there will see rallies. The dollar index just under 109 levels. We'll take a break. We are back. Deepan Mehta of Elixir Equities will be joining in with some fundamental stock conversation. Stay tuned.
Welcome back. Well, we have listed on all the top stocks for you. Now let's get into further detail on all these names, and let's get some fundamental analysis. Deepan Mehta of Elixir Equities joins us on the show. Hi Deepan, good morning. Hope you're feeling good this morning. Well, let's discuss a few stocks, and Manappuram Finance is one such stock that comes to mind because the RBI has lifted the curbs on their arm, Ashirwad. Now, the stock has seen a bit of a recovery from those lows of around 145, 150 odd. What do you make of the stock at around 180 rupees? This is definitely good news. It's had its share of challenges, and valuation-wise, it trades at a big discount in comparison to Muthoot. One would say rightfully so. Your view?
Yeah, good morning, Nigel, and thank you for having me on your show. Yes, I think certainly there's a trading, I would say, valuation gap between Manappuram and Muthoot Finance. But the reason for that is that Manappuram has been focusing on non-gold loans as well. I think that contributes anywhere from 35 to 40% of its AUM. And it has had certain challenges over there, whereas Muthoot has focused largely on gold loans. It's been quite profitable for the company. And with the way gold prices have gone up, it just does create a gap for them to lend further to their existing clients. But I think with this positive news, we may see the gap, valuation gap narrowing between the two companies. And there could certainly be a very strong trading rally in Manappuram given this news. But I want to keep in mind that although the restriction on Ashirwad has been raised, the prospects of the entire sector have come under cloud, considering the kind of spike in NPAs we have seen in the microfinance sector.
And Deepan, hi, we'll talk about the microfinance sector as well in just a bit. But just a few names, a few more names. RIL is seeing some strength. From 1,200 rupees, it's seen about a 5-6% kind of a pop over the last few days. So any thoughts there, Reliance? And the second one is Dixon, which sold off 9-10% yesterday. Just under 17,000 now. High was about 20. But 6 months back, the stock was at about 10,000 rupees. You know, it's how you look at it. Time frames, really. But your thoughts, RIL and then, of course, Dixon.
See, I think Dixon could be a natural correction. I haven't seen any adverse news flow over there. It's an expensive stock, and, you know, at any point of time, If the results are not that great, then certainly you could see a sell-off in it, and which is what has happened over there. Reliance, I think it's more to do with some buzz around the Jio IPO. But I don't think that if an IPO comes, it's great news for Reliance shareholders, because the holding company discount will start creeping into Reliance Industries, and that's never very good for minority shareholders. So I would just be a bit cautious on Reliance. And Dixon, I think, as a measure of disclosure, we are invested in it. So a minor correction shouldn't shake out long-term investors. So I would remain invested in Dixon for the time being.
Paytm, any thoughts? High was about 1,000 rupees, down to about 900.
See, I think that, considering the market structure and the fact that we expect a further correction, I think high-price stocks, expensive stocks may lead the correction if and when that takes place. So that may be a good opportunity to buy Paytm and some of the platform companies after they've corrected even further from here. But these are companies you need to keep on your watch list, likes of Paytm, Zomato, and further correction would make them even more interesting and provide a bit more comfort in terms of valuation. But nonetheless, I think the kind of bad news which was coming from Paytm certainly has stopped in the last few months or so. And we look forward to a good earnings report from Paytm and the progress which they are making towards getting into solid profitability.
Zomato high from about 300 plus down to about 250. Just one more sort of space is microfinance, which you kind of referred to earlier. Names like the decent quality names like Credit Access, etc., have seen a decent bounce. I mean, from 800 to almost 1100 at the high yesterday, and then it cooled off. Anything here, Deepan?
No, I think, Prashant, I would like to wait for some more reforms in the microfinance sector. And, every few years, and I've been a big investor in all these companies, and every few years they get into some tangle with NPAs, and that's not acceptable. When the times are good, they report 30-40% type of growth rates, and then suddenly 1 or 2 quarters, the NPAs spike in such a way that they have to make massive provisioning. So I don't think that from this kind of volatility is acceptable from an investor's perspective. So I would just like to wait and watch and see how the sector evolves. It's very important from the nation and from the economy point of view that we have a vibrant microfinance sector. And some of the reforms they are talking about are very important, but implementation is the key over here. And the one real data point we're watching out is the restriction on number of loans that can be given to an individual. I think that's what has really spoiled the industry.
Okay, all right. Deepan, request you to stay with us, wanting your view on the housing space as well, because the next management we have is Ashiana Housing. That's the first management on the show. The company reported a strong showing actually in Q3 on a year-on-year basis. So on a sequential basis, there's a bit of a decline. To discuss more about the past quarter, the trends going ahead, we're joined by Mr. Varun Gupta, the director at Ashiana Housing. Hi, Varun. Good morning and Happy New Year to you, your entire team, and wishing you all the best for 2025. Well, let's talk about the past quarter. Happy New Year. Let's talk about the past quarter then. On a year-on-year basis, looks absolutely stellar. On a sequential basis, not that great. Could you tell us why is there a decline on a sequential basis? Point number one. Point number two is you had guided for pre-sales of around 2,000 crores. Stick to that?
Yes. So first, we stick to the guidance of the pre-sales of 2,000 crores. The last 3 quarters have gone as per plan. So now the 4th quarter will really define whether we'll hit our numbers in terms of guidance or not. We have 2 phase launches which are going to be critical, one in Gurgaon, one in Jaipur, to define whether we get to the 2,000 crores number or not. And at this moment in time, we maintain that guidance. We think we are on track to get there. And quarter variations, as I said, we have some quarterly variations because of what projects are available, where do we have stock to sell, what launches happen. So quarter numbers for us do vary given the size of the company. So last quarter was, I think, a great quarter in the sense that we did not have much stock to sell in Gurgaon in terms of the launch that happened in Q2. Therefore, the Q2 was great. In Q3, we had actually secular sales across locations and saw good numbers come from various cities. And that's been the heartening part about the last quarter that we saw.
Okay, all right. Just one more question, Varun, since you mentioned about the sales from new launches as well as from the inventory. If you could break it up for us, in the past quarter, how much of the sales were from the old inventory that you had and from new launches? Is there a breakup?
I do not have that data exact breakup, but in terms of a new project launch, we had all of one in Ashana Swarang, and we had two phase launches of Ashana Amod Phase 2 and Phase 4. I don't know the number on top of my head, but I would say close to about 45 odd percent should be from there.
Okay, all right. A quick question then on pricing. You know, your average selling price per square foot, I think, moved up from 5,000-6,000 rupees, closer to around 9,000 rupees. That's the last number that I have. What is the rough number that you're looking at? What kind of range? And a quick question on Gurgaon as well, in terms of demand. There is some fear that demand is plateauing out. Any signs for you, or you believe it's as rocking as it was?
So demand in Gurgaon is plateauing out. I think overall there has been a lot of supply in the luxury segment in the market, and Gurgaon has had speculative investments as well as a market as a whole. Fortunately for us, two things: we operate in the 2 to 3 crore segment there, and so we are in a sort of supplying units in a ticket size where there is still lack of supply, and we don't allow transfer of units without registering the units. So we've also had much lesser speculative play in when we sell our apartments, and both of those, I think, provide significant stability to our sales. And in terms of average sale price, I think we will be within that 6,000 to 8,000 rupees a square foot of average selling price, depending on what inventory we sell in what projects and locations, because I think right now we have price points varying from 4,000 to up to 15,000 rupees a square foot. So depending on the mix, the prices on a quarterly level vary. I think we should average about 7,500 rupees a square foot in general over the next few years.
Okay, 7,500. Varun, hi, good morning. You know, yesterday we had someone from Knight Frank, and there was a broader discussion, not a company-specific discussion on real estate. And he said he was kind of referencing the last, big fall that we had, and it started in the NCR region 12 years ago. And he was saying, well, I shudder to think what will happen if that were to repeat. It was just an observation. Where you say demand is plateauing out in Gurgaon, it's largely a function of what? I mean, too much supply and demand not keeping up? Or, you're actually seeing, that's evenly matched, but demand not keeping up. What's your sense?
So my sense
and in what price category? In what price category?
Yeah, so my sense is that Gurgaon is not oversupplied in total number of units as compared to the number of units that the city can absorb. I think what the challenge there is that all of us as developers have gone and launched more and more luxury projects because they're more profitable. And I think more in the north of the 4 crore, 5 crore bracket, I think there is too many units as compared to the demand in the affordability index that is there. So that is there. The fall that was there 11, 12 years ago, I don't know when it will come. The business is cyclical. So we are going to get some falls and then some upswings and then some falls and then upswings in this business. I don't think we should fear that so much. That's just part of how real estate operates worldwide, and cycles will come and go. Our job as a management is to be able to work through those cycles and build a business which will run through the cycles.
Generally, I think hopefully the companies are also much better capitalized, etc., as compared to back then, right? So that is also the case.
The balance sheets are in much better shape overall.
Absolutely. Varun, thank you very much for that. Appreciate it.
Thank you.
You're on CNBC-TV18. Good luck. Deepan is still with us. Deepan, any thoughts? That conversation with the management of Ashiana, any thoughts? And it's not just Ashiana, but the broader commentary, and there are lots of listed players from that market.
No, Prashant, I think very good interview and quite candid in terms of what the reality is there in the market. So that's great. And I did not know that they were so well diversified geographically, which offers some comfort, because if one particular sector one particular region there's a slowdown, that other sectors and other regions can pick up. So generally positive, but I don't have much of knowledge about the company, so I'd reserve my judgment on that stock for the time being.
No, got that. Just a few more names, and I think we are sort of ticking closer to the market. Actually, let's take a quick commercial break here. Deepan stays on with us. There's 9 minutes to the pre-open. We're going to come back. Mitesh and Sudarshan will be with us with some technical trading ideas that's coming up.
Welcome back. Well, the cues have been not too supportive, the global cues that is, and the implied open is now suggesting maybe a 70-point dip at the start. Mitesh Thakkar and Sudarshan Sukhani are joining in. Gentlemen, morning. So it's been challenging in the face of all this FPI selling, right? And the Nifty has just been drifting lower and lower. Let's talk about your approach to trade today. Mitesh, indices first.
Yeah, so yesterday, good morning. Yesterday I was talking about very critical level of 49,700 on the bank Nifty. We did venture below that level on an intraday basis, but the closing was about 100 points higher. I think, yesterday what we did was that as the recovery happened, we did exit most of our put option spreads, but the structure for me is negative. Closing below 49,700 would suggest continuation. If it doesn't happen, then there could be chance of a pullback or a bounce back, and therefore I think, one, either we short below 49,700 on the bank Nifty, once it looks like it'll close below that, or you sell on a pullback closer to about 50,400, 500 zone. So that is the way we are approaching the market. I would still want to get into options positions till we, unless until we get a pullback wherein shorting at futures with a tight stop loss can happen. So that is the way we have been looking at the markets. The overall view is negative, but because that support has held on, there could be 1-2 days of bounce back and some volatility.
Okay. Sudarshan, what would your approach be? Nifty, bank Nifty, any trades?
Yeah, good morning. Well, the Nifty has been moving sideways and choppy. Sometimes it opens up, closes lower, opens lower, closes higher. That tells us there is no direction so far. Now, the Nifty becomes a buying opportunity once it crosses a threshold. For me, that threshold is 23,800. That tells us that there is strength in the up move. That hasn't happened in the last 3-4 days. So we'll wait for that event to happen. If it happens, till then, I would say that I have no trade in the Nifty because shorting for me is never easy. It's for the index. And buying is not a good idea when there is a visible sense of weakness. So stay away till the Nifty crosses 23,300. Focus on stocks.
Okay. Let's then actually talk about stocks. So, Darshan, what are your individual trades today?
Well, I have, buy on dip ideas, and sometimes they work, and in markets, sometimes they don't. But we have to keep on trying. Bharti Airtel is a buy with a stop under 1590. M&M Finance is a buy with a stop under 270. SRF is a buying opportunity with a stop under 2300. And my only short is an intraday short, Oro Pharma, the stop above 1300.
Okay. And Mitesh, let's come to you. Stock-specific trades today?
I also have a few buy calls, especially on the NBFC and financial names. But the first one I would like to begin is Reliance. I think after a long time, Reliance yesterday opened with a gap up and then closed towards the high of the day. So a good reversal short-term candlestick pattern over here. I think if it starts getting past yesterday's high of 1271, buy with a stop at 1245 for a target of 1320. Chola Finance is a buy on declines around 1265, 1270. Buy with a stop below 1249. Look for targets of 1305. And Bajaj Finserv. I've given this call many times in the last few days, but still remains a good entry point in case we get it mildly lower, even better. So buy here with a stop at 1665 for targets of 1750. And a sell call on CAMS with a stop at 4760 for targets of 4550.
Okay. All right, gentlemen, got that. Thanks very much. We'll come back to you a little closer towards market opening. Now, we do have to take a quick break. Come back on the other side. We'll have the pre-opening rates. And also, we'll be in conversation with Alok Mishra of MFin. A lot of chatter about the stress in the microfinance segment. Yesterday, there was a meeting with the DFS secretary as well. More details coming up.
Welcome back. We're getting into market opening. So let's get in Sneha's shares. She'll help us out with some derivative trading ideas. Hi, Sneha. Good morning. Fill us in with your view on the index as well as some stock trading calls.
Very good morning, Nigel. If you look at market, last two sessions has been very choppy. Now, if you look at the overall chart structure, the chart structure looks weak. At present, 23,800, 24,000 is a strong resistance zone. In case of any bounce back towards this zone, it should be utilized to go, to exit your longs instead of going ahead and buying. On the lower side, I believe 23,500 is the support zone. In case we breach this zone, we may head towards 23,200, 23,000. That is the level we can see. So at this point in time, stock specific would be trading in an individual counter would be a good idea. So as far as individual counters are concerned, I have a two call. First one is a buy call on ONGC. Now here, this counter has taken a support near the 89 EMA on the weekly chart. Looks good. I believe the support of the resistance around 240, 264 should be acting as a support now. So with a strict stop loss of 264, it's a buy for the target of 282. Apart from this, we have a sell on Motherson. Now, this counter has been weak. We have seen decent selling pressure. And after that, this counter was consolidating. I believe looking at the overall chart structure, it has managed to, at least take a support near 152 zone, which it has slightly breached yesterday. So I believe we may see further selling pressure. So here we can go ahead and sell this counter with a strict stop loss of 157 for the target of 140.
Okay. All right, Sneha, got that. Thank you very much for the calls and the trades today. Let's move on and talk about a lot of the news that's coming in relating to the microfinance space. The DFS secretary chaired a meeting with microfinance institutions yesterday. Now, in this meeting, MFIs conveyed that they are facing difficulties in raising low-cost long-term funds, and the quality of the portfolios is perhaps being impacted by various issues, including a reduction in lending to the sector. So let's talk about this, what the issues at hand are, and what's the way forward. We have with us Mr. Alok Mishra, CEO and Director of MFIN, the industry body, self-regulatory body. Mr. Mishra, thank you very much for joining. And let's talk about this conversation that happened at North Block yesterday. I'm not sure if you attended the meeting or not, but really, what is it that microfinance lenders are seeking from the finance ministry, and are there any reassurances coming?
Yeah. Morning, and thank you for having me. Yeah, I did attend the meeting and I made the presentation on behalf of the sector. Generally DFS, we have regular meetings, maybe once in 5 months, once in 6 months or something. So it was a similar type of meeting. I presented the sector's contributions, what is the sector's outreach, and also few other issues like what is the current credit quality and what are the requests to the government. So all these things were discussed. It was a very cordial meeting, and as you have rightly quoted, the government has last night also issued a press release on it. So it was not something specific meeting. It is a regular meeting which we hold with DFS calls us periodically and has a meeting on the whole sector. So I did the presentation.
Sure. Yeah. So, but fair enough. We take your point, Mr. Mishra, that it was a regular routine, meeting that happens. But the concerns are a lot wider and deeper right now. If you look at any projections on the street, including I was looking at one, I think that India Ratings put out, the recovery expectations are being pushed back to now, second half of FY26. So, did you seek anything, any specific support from the finance ministry in this meeting yesterday?
Yeah, let me first address your figures on credit quality. I think the credit quality, as I told, I think last week I was on your show and on CNBC, and I had said the field evidence suggests to us December was much better than November and January is better. So the trend continues, but I said that in last week also that let it continue for 2-3 months and then we will have a sustained figure. But even now, with our portfolio at risk, which is not overdue, portfolio at risk 1 to 90 days at around 4%, I think we are doing okay. The situation is coming back to stability side of it. So those who have pushed it to June 26 or whatever it is, I can't comment on that, but that's not my view on that. And as regards...
I'm sorry, yeah. We'll see what happens, but did you ask for anything specific? And has anything specific been promised by the government?
See, government promise I would not say, but of course government will examine it. We have said about three things basically. Let me tell you from our side. One was on the, it has been a long-standing ask from us that there has to be a dedicated refinance facility focused only on microfinance, so that because like in the current times, if you don't, if your credit quality is not so good at currently, and if there is a liquidity stress also from funding, that compounds the problem. So that was one ask. Second, we have also talked about KYC, enabling at least the last 4 digits of Aadhaar to be stored in the CICs for dedupe, so that better underwriting can be done. So these were two specific asks. And third ask was about the guarantee scheme, because there is a guarantee scheme, CGS 1 and 2, but we said it has to be made more friendly for microfinance. And the contribution of microfinance in creating around 2 crore jobs, catering to 8 crore unique borrowers, low-income borrowers is there, and it is all unsecured. So we need the support of the government in having a suitable guarantee scheme also.
And what did the government say? When will you hear concrete, something concrete from the government side?
Well, it is all written in the press release. Government last night, Press Information Bureau's press release, they have said they have taken a positive note of it. DFS values the contribution of microfinance in building India, and it will be suitably taken up in consultation with us.
But that doesn't, it's not very concrete. I mean, it's kind of open-ended. Are you expecting anything, any specific measures?
Yes, this sector has reached this place of 4 lakh crores and 8 crore borrowers only because of support of the government and the Reserve Bank of India. And see, you cannot expect in meetings we make demand. These are wider demands and what you can say policy action. They will require deliberation, thoughtful. You cannot expect overnight action on this.
You think something in the budget, Mr. Mishra?
I hope so. I remain positive. We'll continuously engage with them.
Mr. Mishra, can you also detail at an industry level, what do you have to say about some of the concerns that are being raised? I mean, and some numbers will help. I'm quoting various agencies, and this is the latest India Ratings report saying that there are multiple headwinds for the sector, such as borrower over-leveraging for both MFI loans and non-MFI loans, reduced center attendance, high attrition at branch levels, and instances of fraud leading to a higher operating and credit cost for the sector. So, this is what analysts on the street are pointing out. So can you tell us, for the industry as a whole, how do you see credit costs shaping up? What about the instances of, NPAs, frauds? What should we work with? Some ballpark maybe estimates that we can work with for FY25?
Well, as I said it last week again, that I will not comment on an individual rating agency's report, but the figures with me, last week also I had told, this issue of, I do not know from where this issue of frauds come. I have not seen, neither reported any sector, because frauds are reported to Reserve Bank of India also by all NBFCs. I think that's not fair. On the portfolio quality, again, I will tell you the exact figures as of October. PAR 1 to 90 days is around 5 to 5.5%. If you want, I can give you the exact figure also. I think at the year end, we should marginally improve it. By March 25, I think the PAR 1 to 90 days will come down lower, and NPAs will also start coming down. But all the NBFC MFIs, wherever the NPA is there under ECL methodology, they have taken provisions. So I don't see much contribution on the credit quality. You will see we were the first to show the warning signs in May and June, and sector will be the first to come out of it.
Well, we certainly wish that is true. Mr. Mishra, we'll continue to engage with you as you engage with the government over the next many weeks and months. Appreciate it very much here on CNBC-TV18. I think it's, 6 minutes to go for the market open. The pre-open is left with about a 14-odd point lower tick, 23,674. Let's get trading ideas. Sudarshan is with us with his 9-10 call. Sudarshan, morning. What do you have?
Well, consider buying SRF. SRF buy with a stop under 2300.
Okay, SRF. Mitesh, what about you? Morning?
I'll go with the buy. Morning, Prashant. I'll go with the buy on Reliance for targets of 1320.
Okay, all right. Reliance, of course, has been the mover last few days with about a 5-6% gain from the recent lows of about 1,200 or so. Well, what are the standout brokerage reports which Nimesh is going through, and what should be in focus? Nimesh, good morning.
Hi, morning, Prashant. So today's standout is on Bajaj Auto. CLSA today has upgraded the stock to outperform from underperform. So technically a double upgrade, and they have a target price of 94.93, a potential 10% upside from current levels. Now the key reason for the upgrade is a steep correction and improving two-wheeler franchisee. Remember, the stock has corrected 34% in the last 4 months, and is now trading at close to 21 times versus long-term average of 19 times. But they've increased the market share in two-wheelers to 25% in December, which is the strongest across all the players. And despite the ramp up in the electric two-wheeler space, the company is able to maintain the margin at 20%, which CLSA believes is quite credible. Now, the key risk is the fact that there could be further competition in the executive segment. While they are very strong in the premium segment, is the executive segment where there is a lot of competition from peers, and even Bajaj is trying to shift from 100cc to 125cc. But the key upgrade today is largely on back of a steep correction, and the fact that in the electric two-wheeler space, now it's a market leader with almost 25% market share and still maintaining 20% margin.
Okay, all right, Nimesh, thanks a lot for that. We'll have to keep an eye out on that one. Bajaj Auto. Well, I'm looking at Hindalco, and the stock is one of the top losers on the Nifty, but it's down only around 1%. The reason that Hindalco is under some pressure is because Novelis's preliminary results don't look very, very good for the past quarter. They're saying that the adjusted EBITDA number will be around $360 to $370 million, and the total volumes are 900 to around 910,000 odd. That means that the adjusted EBITDA per ton on a calculated basis will be somewhere in the vicinity of around $400 to around $407 per ton. And that will be disappointing because most on the street were in that vicinity of around $420 to around $430 per ton. The key reasons for this softness, one is that the higher scrap prices, that's impacted spreads, so that's why it hurt profitability. Second factor is that the product mix wasn't very favorable. Auto segment contributed relatively less. However, the stock could see some kind of support at lower levels because it's already corrected 24% from the recent peak. That's post Q2 when they withdrew their EBITDA guidance for Novelis. And the second factor is the management is saying Q4 will be as good as Q2, which means that the EBITDA per ton could bounce back to around $480, $490 per ton. So that's why the stock is under pressure, but I expect some kind of recovery as the day progresses.
Okay, all right. So that's Hindalco in focus. By the way, the pre-open rates have settled. It's very quiet, just about 14 points lower on the Nifty. Watch for Swiggy. Swiggy seems to be reacting to a Bernstein report. They've initiated coverage with an outperform rating. Stock's up about 3% right now. I think the target is northwards of 600, if I remember correctly. We'll come back on the exact number, but that's working well for the stock. Speaking of course, consumer, let's get Mangalam back in. There's a Jefferies note on, I believe, the travel sector and the outlook in 2025, Mangalam?
That's correct. So we've seen a lot of travel stocks in focus all of December, the third quarter, which is seasonally strong, but that doesn't seem to be dying down even in January. And that's exactly what Jefferies' view is, that demand in India for both travel and tourism, domestic and outbound, has remained healthy even the post-COVID growth normalization. In fact, industry pricing across segments is fairly elevated. That hasn't impacted demand, telling you that Indian consumers are prioritizing travel over many other spending categories. They continue to like the space, and they have a buy rating on all the stocks in their coverage area. The key themes for 2025: one, the preference for premium and experiential travel. Secondly, there will be huge, wedding season, the FTA revival, and alongside that, we have Mahakumbh and lower supply coming in on the industry as well. New airports in both Navi Mumbai and Noida will further support travel, and Indigo will see, supply of some of their new planes, and as a result of which, they could explore more international routes. So as a result of which, their preference, in order of preference, the stocks, we have Indigo, Indian Hotels, GMR, and TBO. On Indigo, they have a target price of nearly 50 to 60. Indian Hotels about 1,000 odd rupees. GMR is about 77 rupees. And TBO Tech is close to around 1743. So that's the space that will be in focus today.
Okay, thank you, Mangalam, so much for that. I'm sure many of us have contributed to all or most of those stocks in terms of, just the revenue as customers in the year gone by. On Swiggy, by the way, the Bernstein target price is 635. What they're saying is that the market share is going to stabilize and Swiggy will do better from here on.
Swiggy is, by the way, also, and Shilpa will tell us more, they've also now introduced a service, an app, which kind of does what Urban Company does, for everyday chores. I mean, it's an app, and I forget the name now, but Shilpa is going to be joining us to tell us more a little later. So they seem to be spreading their wings, not just from quick commerce and food delivery into other things as well. The first rates are up on your screen. We've got the Nifty, which is at about 23,660. It's down a little bit. The Nifty Bank is down about 0.25%, 49,600. So, yeah, I mean, that's swiftly down, 0.5 now on the Nifty Bank. So that's a much sharper cut. Yesterday, the Nifty Bank underperformed the Nifty by quite a bit. And I think these would mean newer lows for the Nifty Bank. I mean, breaking below, or not yet, what we saw yesterday at the lowest point. IT index, it's a flattish start. TCS, of course, will be in focus. Advanced decline is slightly positive, but not very much. Nothing really write home about. And I think the Nifty heat map will come up on your screen, gives you a quick snapshot view of the action as far as the Nifty 50 stocks go. Many of them, of course, still opening up, and we'll have that up in a bit. There you go. I think got about 18 odd names which are in the green, and the rest are in the red right now. So 40 points lower, 23,646. Surabhi.
Okay, so let's get to it. Bajaj Autos are reacting very well to the CLSA note that Nimesh just flagged off. Gains about 2.5% on that stock. Make that 3% now, because remember, CLSA is looking at a price target of well above 9,000. I think 9,400 if I'm not mistaken. So that's the winner. Tata Motors with its JLR numbers also looking good this morning, 1% higher. Then you have some buying on Infosys, on Kotak Mahindra Bank. There's M&M, which is up about 0.5%. Basically, autos looking good. M&M, Bajaj Auto, Tata Motors, Eicher Motors, Hero Moto, even Maruti's got a tinge of green. Auto is the strongest part of the market right now, followed by the IT big boys. Infosys about 1% higher, and TCS is approaching numbers with cautious optimism, about 0.3% higher. What's not working for the market? Banks, banks, and banks. SBI is down about 1.5%. HDFC Bank is down 1%. ICICI is also slumping this morning, so not looking good for the big lenders. What else? There's ONGC, L&T. ONGC is finally cooling after 2 very smart days of gains. L&T is down about 0.5%. And there's ITC losing about 0.5% as well. So those are the early trends coming through. The big sort of trade this morning is on autos. Most of the stocks on the upside, and the Nifty is now down 56 points.
Well, the two stocks that I'm looking at is SRF as well as Navin Fluorine. There's been a big spike up in refrigerant gases because significant, there's a US distributor out there who's raised alarms over R32 and R125. That could be a bit of a supply constraint. And because of that, both these two stocks are now up between 9 to around 10%. We'll try to get you further details, but for the time being, that could add to their profitability. We'll have to find out how much exactly. That's clearly the reason why both these two stocks are now up close to around 10% or thereabouts. So big move is what we're seeing on both these two names. Let's pull up Hindalco. The stock had started off in the red. There is a likelihood that the stock could see some kind of bottom fishing. So, that one should come up for you on the screen. Hindalco, as we mentioned earlier today, the news is negative. The street will look ahead because of the correction that we have seen and the promise they're given that Q4 will, look as good as Q2. The other couple of stocks that we're looking at, Spandana Spurti has cooled off a little bit. We had Transformer and Rectifiers, one of the big outperformers in the last few years. Well, that one as well has come in for profit taking and came out with its set of numbers. The Nifty is now down close to around 60 points or thereabouts, but from the broader markets, plenty of stocks moving around. IGL bounces back up 2.5%. UPL as well up close to around 1.5%. And Aarti Industries is the other one that's up close to around 2.5%. Survey.
Okay, Nigel, well spotted on SRF and Navin Fluorine. Look at these stocks flying away. SRF is 10% higher. And Navin, I saw, also make that 10% of a move on, Navin Fluorine. Manappuram, the relief reaction continues, almost 5% up on that one.
Well, 60 points down on the Nifty, 23,630 is where we are at. And we are, down and... at least on the index level, we're down. By the way, broader market breadth is positive, not by much, by about 200 stocks more on the gaining side as compared to what is down. Maybe just a few other names here before we go any further. Nimesh spotted Bajaj with that sort of, I think it was CLSA, I think, 2% higher. So 87 on Bajaj Auto. Phoenix Limited, the mall operator, 3.5% there. There is Zydus Life, which is up about 3% or so, 1,012. Transrail, which is a recent listing, is up 5%. And, only mentioning these names because they've also got large volumes right now. Anand Rathi is up about 4% or so. Sarigama is coming up with a 5.5% gain. So 578 on Sarigama, looking good. Shakti Pumps now closing in on 1,400 rupees. It's up 30% in 2025. I mean, so it's just one of those names which has done very well. Car Trade is up about 3.5%. Car Trade, I think, was a mover yesterday as well. Tata Chemicals is up about 2%. Deepak Nitrite is up about 2.5%. Aarti Industries. So it's not just, I mean, SRF and Naveen are there, but there are, maybe it's sparking a bit of an interest in some of the other names as well. Borosil Renewables is up 5%. It's one of the stocks we highlighted as part of our stock list early on in the morning. Spandana Spurti had a big pop yesterday, was up 35% in 2 days. It's taking a bit of a knock. It's down 5.5% on volumes, large volumes. And Credit Access ended up 12% yesterday. It's down 3%. So there are some small reversals. We just had that MFI discussion just a little while back. The other one on the downside is Kalyan Jewellers, which saw a big 8-9% knock. It's down, it's starting down, not big, but 1.5 lower. And, you know, you had all these EMS companies, Dixon and Keynes, and, you know, they were all down yesterday. Keynes is starting. I can spot only Keynes with volumes, which is down about 1.5%. Vari Energies and Premier Energy. These are the other two names which are in the renewable energy space, solar space, which are starting about 2.5% lower at this point in
Just
time.
one stock, Prashant, I wanted to highlight. SBI, the stock is trading at around 765.
Yeah.
The day's low is around 726. You know, so there appears there there appears that, I don't know whether it's an erroneous trade or there is an intended trade out there. But in the first minute itself, there are a couple of trades that took place in that vicinity of around 726 rupees or so. Keep an eye on that.
That looks like a swoon. It looks like a what we call a fat finger or whatever. But we'll have to sort of confirm that. But yeah, the low is about 726.
By the way, the city gas distribution players are a little excited this morning. Yeah. IGL, MGL and Gujarat Gas, all of them are up. I thought maybe it's a IGL specific move because we know this Maharashtra gas IPO, the JV between BPCL, GAIL and IGL, maybe because of that. But no, the others are also excited in tandem. So city gas distribution play is doing quite okay this morning.
Yeah, Kotak Bank is another one which is up about 2% or so. You know, again, big underperformer last couple of years and some sort of conversation that maybe it's one of the stocks to watch out for, at least tactically speaking, if not for the slightly longer term. Atul Suri is now joining us, CEO at Marathon Trends PMS. He's with us here in our studios. Atul, great to have you with us here. Good morning. Thanks very much.
Nice to be here. Thank you.
Yeah, it's starting. I mean, it's you know, we'll talk technicals, but the news flow you can't ignore either. There's
a lot. There's a lot that's going to keep you busy for the next 1 month.
I'm not talking about yields or rates.
Are you able to follow the posts and the memes?
I'm not talking about rates or yields or commodities. I'm talking about Greenland, Canada, Gulf of this. And
you have an exciting job for the next 1 month. See, for 20th, you've got the whole
next 1 month or 4 years?
4 years is a long. Then you talk about the Amrit Kaal. Let's talk about then 20 years.
How is it looking?
So I think that the next 1 month is definitely going to be very volatile because you've got three very big things I think that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So within the next 1 month, you're going to have three such very big events, all three very unpredictable, a lot to talk about. But I guess, you're going to see volatility. But I feel beyond that, markets will settle up. So trying to, sort of make a call for one or two of these events is going to be difficult because, I mean, how will you pan out for this Trump trade? What is he going to do? What is he going to say? Which side of the bed he gets up from? I mean, these are things, where the best and best can't. So for us, I think it's more a question of reaction.
But directionally, Atul, is it looking,
So what I think, Prashant, that already the world is factoring this in. See, if you look at bond yields, right, the US 10-year, it's a very important instrument. It was around 3.6. Trump won the elections. It's moved 100 bips. It's at around 4.6 or so. An asset class which seemed to be sliding down because inflation was so-called capped, suddenly has taken off. What has happened to the dollar? Very important asset class, especially for risk on, risk off. All these FI flows. Why do FIs selling? Why are they this? It's nothing that they don't like India or it's a big deal. For them, the whole thing is we are just part of a big puzzle that there is playing out. And the way the dollar index took out from 107 heading to 109, That again tells you that the world is gearing up for inflation. See, because if you look at most of Trump's policies, whether he's talking about tariffs, whether he's talking about border immigration controls, whether he's talking about tax cuts, they tend to lean towards a higher inflation. And that is why markets are already factoring in it. Now, what comes out, how much does he posture, how much is just saber rattling, this only time will tell. I mean, as I said, we have no capacity to judge that. So I guess this is something that is going to play out. As I said, it's going to be very exciting. But how can you prepare for such events?
But again, directionally, just to, जैसे बोलते हैं, ऊपर का घर बंद है कि
No, I think that the market will surprise. In fact, what happens is that, see, right now we are at very important, very near crucial supports, which is your, I think, 23,300 or something, which was the last bottom. So that is one area which in the short term can be an issue right now. We're at 23,700 thereabouts. So that definitely is an area of concern. But, sometimes you feel, the breakdowns happen and suddenly the market has ways of pulling up. And on the upside, if you take out at 24,850, I think I remember was the last high. If that gets taken out, then you make a case for a new high. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off. And when you feel bullish, the market is going to, which is a typical range-bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens. Because, remember, we are nearer to the lower band just by 2% or thereabouts. Then I feel that, it can lead to more.
When you said markets may surprise on the upside or the downside?
No, I feel that at the moment there's a lot of pessimism, Surbi. At the end of the day, people are worried, ye hoga, wo hoga. There's a lot more bad news. So that's good if the bad news is getting absorbed, it's getting factored in. And that is why even if you see the markets, they are not at lifetime highs. They are good 10-12% from there. We've spent a quarter or so of nothing. In fact, last 6 months, you'll realize that, if you look at it, there has been no substantial really gains. Yes, the markets made a new high. But portfolios, stocks, all the leaders are all off 20%, whether it's your defense, your PSUs, your private sector banks, barring IT, if you see. Most of the sectors and stocks are off 20%. So things have cooled off. Time has been spent. 6 months have been spent. Price has come off 15 to 20%, maybe 12-13% on the index also. I think that is important.
But Atul, before we start talking about what to do here, just complete that point on the two important indicators, both the US 10-year and the dollar, because now on the fundamental side, suddenly we're hearing, for the first time, narratives about maybe there is a global recession coming, maybe the US economy is going to, all of that.
That should be, you will keep hearing. Recession, we've been hearing since 2 years.
Exactly.
One month it's inflation, second month it is recession. So that all is one big thing. But I said the two things that really matter to us as people in the markets, and these things are very, very solid indicators, is where the dollar is headed.
But what do you see anything?
Yeah, so a dollar at 109 is not a pretty space to be in. It's honestly not. I would rather have the dollar at 107 or below. That's the range it had set out for 2 years. We'd rather have a dollar there where we don't have to bother about it. Today, we have to be bothered about it because remember, when the dollar goes up, it leads to a risk-off trade. Like, we are getting shocked. Why FI is selling so much? As I said, it's not that they can't see the big India story. It's that they have multiple pressures. They are dealing in multiple asset classes, these whole global macro players, and what is the impact of the dollar, what currency they borrow in. And when US bond yields are going up, when they are getting at US interest rates at that price, then the need for them to be more adventurous and come to emerging markets where the risks are higher is less. So money is moving to the US, and that is very, very visible. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. A lot of news, but you just have to wait it out.
All right. Hi, Atul. Always good to see you. So next 1 month could be challenging. But for the year on the whole, sometimes when you get a lot of pessimism, it's actually good news. Because then, in fact, you expect the markets to be absorbing this and then gradually move up. For 2025, do you expect the markets to give a high single-digit return even from these levels? That's point number one. And point number two is, that's provided obviously the global markets don't collapse.
No, why single digit? Why?
I mean, conservative.
I mean, single digit is like, then an FD would be a good idea.
I'll tell you, Atul, from the kind of market talk that we've been hearing for the last couple of weeks or so, uncertainty on Trump, the dollar index, as you mentioned, 100, and if someone gets 10% this year, they'll be quite happy.
So
give us the optimistic. The last time we joined, I think we were talking about late 20,000. But tell us, what is the level for this year?
No, I don't know about levels, but I do think that the first few months are going to be challenging.
Yes.
Even for India, our macros have slipped a bit. Your growth rates have slipped. Corporate earnings are not as they were about a year ago. So I do think that this is going to be, but I do feel, again, it's a personal hunch that the government, whether in India, whether it's the US, these guys are very pro-growth. They are development. They are capitalist in their mindset. They want things to come up. They are not going to let this country economy just slip into a recession. They are going to put in the fight. So I do think that, right now, lack of government spending or less government spending is one of the biggest problems. I do think that they will come back. Whether it will happen in the budget or after that, we don't know. And that is why I feel that the recovery in the market will be more back-ended this year than front-ended. The next few months will have their challenges. As I said, it's very heavy on news. There is need for government action and policy, but I do feel it will come. And that's what, as you started the point, that when you are very pessimistic, that's when the seeds are sown. And as I said, that we've spent 6 months consolidating, price-wise and time-wise also. Even price-wise, we're no way much higher than we were 6 months ago, right? 23,300 was the election day, I think, volatility high, and that is the support right now for the market. So we were where we were 6 months ago.
Atul, so let's talk about ways to look at how to. So we had Sandeep Tandon of Quant earlier with us on Friday. He was saying maybe one way to do it is, first of all, the call that large caps will do better. Many have been beaten down quite a bit. And big laggards of 24 should do better in 25. A simple kind of. And it's, I think Nimesh later in the day is putting out a piece on edit, I think tomorrow. Saying, just looking at this, and does this work by the underperformers the last year? Not all the time, but what's the hit rate? And he's looked at data going back the last 5 years.
There's a lot of study in the US that it's a trading system actually.
Do you think that is something to do here?
So I don't know. I don't know about the buying the dogs of last year, but I do hold the idea that large caps will outperform. See, we do something called a ratio chart. I mean, unfortunately, I don't have it on screen today. But what happens is that when you do a small cap to large cap ratio, you will notice that there is a 3 to 4 year cycle. And if you look at it, large cap relative to small cap, since 2020, that's COVID, this has been the almost 4 years of relative underperformance. For 4 years, large caps have underperformed. And generally, we've seen that cyclically, these tend to be turning points. As I said, we don't know whether it's going to be this month or next month. That is very difficult to call. Correct. But yes, we are at extreme underperformance of large cap relative. These also become turning points. I'm not saying that please sell small and large caps. I think they will still have juice, but wherever the earnings will not support it, I think they will sell off. See, yesterday's market, if you look at it, yesterday the index was okay. It recovered. It was very pretty. But if you went and looked at the small and mid cap indexes and some of the stocks, there was a lot of blood out there. So what will happen is that optically your Nifty will look good, your market will look good, but in there the bleeding will happen. So I guess we are heading in that kind of situation. And in that sense, the term, it's also a better place to find protection in large caps.
So large caps.
Because what has not moved, where there's less euphoria, which is as it is beaten down, and if it's turning around. A case in point, a sector I love, Prashant, is IT, right? I mean, a lot of people are talking about banks. There's consensus bullishness on banks, but I have not been bullish on banks, and I still am not bullish on banks. If I had to put my heart and hat in the largest to be overweight in any sector in large caps, it would be IT. Because if you look at some of the IT stocks, you'll find that a lot of them are pushing to new highs. And I think that is very, very exciting. IT is important because it's the second highest weightage after banks. Yeah. Because you need something to pull this market up. You need a heavy lifter. And I personally think large cap IT is a space I find very interesting.
So, Atul, to go back to your favorite line, right? The trend is your friend until it bends. Leave us with what you're seeing on the biggest trends of 2024. Now, and these stocks have already cooled off quite a bit from the highs, right? So capital goods, industrials, your ABB, Siemens, defense, railways. Where all have the trends now broken down in these high flyers? And where do you think there's still a scope that, maybe you buy the dip and the trend resumes?
Yeah, I mean, two sectors you spoke about which were darlings last year, defense and railways, okay? Very similar in the PSU basket. You'll find that, yes, both got hammered. Post-election, there was a bit of loss of confidence in PSUs, but you'll find a lot of defense stocks have come back. They are nudging, they are pushing back, but railways haven't. So what you're seeing is very, very divergent trends that are playing out even among sectors and themes. Some themes that have continued to do well, things like hotels, continue to do well. In spite of the fall, they continue to make new highs. So I feel that there are going to be some themes and some sectors, but coming back to, the larger thing, what I was telling Prashant, that I also favor large caps. Okay. I also have a more bias towards IT, And there are going to be a lot of plays. Not that small and mid caps are going to do bad, but there are going to be plays. And I feel that these quarterly numbers are going to actually be very divergent for many companies. Index-wise, it may look, as I said, like yesterday, optically it looked all is well. But inside, there was a lot of damage. So I do feel that with this quarterly numbers, I think the market's going to get a little more bifurcated as to where the delivery of numbers happens. Well, they will all make new highs. Maybe the index doesn't. And wherever. So you will find a market where there will be number of 52 weeks high and 52 weeks low on the same day. And the index will be where it is, telling you that the market will be more divergent.
Absolutely, which is why I think we've been hearing this line that this is a year for the stock picker. It's probably not a broad brush stroke. You touch anything and it
As long as you pick the right stocks.
As long as you pick the right stocks. Absolutely. Thank you so much and wish you all the very best for 2025.
Thanks a lot. Thanks,
Look forward to more conversations, particularly as we get through this very exciting month of January. So catch you once the inauguration is done.
Thanks.
All right. With that, let's move to our next guest. And before we do that, just a quick update on the market as well. So it's a 80-point dip now on the Nifty. Nifty and Bank Nifty are in step. Both are down about 0.3%. And the mid-cap index is not too bad this morning. It's down 0.25%. So that's the situation as of now. Let's now move on and get the CLSA view on the Indian market in 2025. We have Vikash Kumar Jain joining in. Vikash, great to have you with us. Greetings of 2025. Wish you a very happy new year. So let's just take forward the conversation that we were having now. The thing is, as we've entered this year, there are too many moving parts, from the US economy to yields to dollar to a slowdown in earnings. Let me start with the last one first, because that's the India controllable, right? How optimistic are you about the second half earnings revival?
Well, I think there's always many moving parts when you start the year, and that's why what we do at the start of the year is we come out with a typical report, which is a very well-read report by our clients. It's called Themes for the Year, and this time we have 25 themes for 2025. And we discuss a lot of what you mentioned. Earnings, see, more than what I feel, I think it's also trying to understand where expectations are, where consensus is. Firstly, we at CLSA, we are about 2 to 4% below consensus as we start the year. And more importantly, when I look at just our numbers and certain key drivers that moves the earnings, that's the moves the big stocks that determine the overall Nifty earnings, there is an assumption of normalization happening rather quickly in terms of growth in FY26. For example, things like credit growth. We are right now sub 11% credit growth. Broadly looking at the numbers that our team has baked in, somewhere closer to 12 to 13% is being assumed for FY26. Similarly, for commodity prices and profitability, we are assuming that things will improve. So there is a recovery that is baked into our numbers. And, our numbers are a little below consensus. So that maybe consensus baking in a little bit more of the recovery. Now, that is just normalization of growth. Now, the process of normalization, if it is a little slower, then after the weak GDP number that we saw in the second quarter, then there is obviously risk to earnings in FY26. If you remember the last quarter, we saw pretty big downgrades in earnings. So, further downgrades can be a bit problematic in terms of expectations of Nifty returns.
You're at 12 to 13% for FY25, Vikash, if I got that right, correct?
That is, we are at 12 to 13% of credit growth. The earnings number that consensus is baking in for FY26 is Nifty earnings growth is about 16%. We'd be slightly lower than that.
Okay. Vikash, hi, morning. Prashant here. So what I'm hearing is caution. So give us a directional view. Put it out there. What is your best sense? Lots of things in the mix, but you got to take a stand. So what's your sense?
Sure, no, absolutely. I think that's what we have done. So I'll tell you, India's expensive valuations is what is being talked about by everybody. What we have brought out this time, looking at the start of this year, is I am actually quite worried about the fact that Indian bonds, as compared to where the parity should be versus, say, US bonds, are looking more expensive. And Indian currency is looking more expensive. And both of that is what sets up, and particularly in the next 4 or 5 weeks where macro is going to be very important and big, that could be a little bit of a problem. Let me explain that. So Last year, we did not have any cuts from RBI, but Indian bond yields fell by 50 bips. In the US, Fed had several cuts, but US bond yields settled up by 80 bips. So Indian bond yields effectively outperformed by 130 bips during 2024. Currently, the differential between US and Indian bond yields, 10-year bond yields, is down to just close to 2%, a little over 2 percentage points or so. Now, to a naked eye, of course, that's one of the lowest we've seen in the last 18 years, but I'm less bothered about it because what I show in my report that this is something which tracks very closely with what is the forward market currency depreciation expectation. And that is more like 2.7%, 2.8% or so. So everything kept together, there is a chance, if US yields do not do anything, then Indian yields need to go up by almost 50 bips for us to get to that parity. Now, if we imagine that happening, and even if we assume that the bond and equity valuation differential remains at the bullish end, that is the max differential for earnings yield versus bond yield, and we go from 6.75 to 7.25% bond yield, then, we're struggling to get anything more than 2-3% return on the market, So I would say it's going to be tough to, and that too in the bull case, if there is a 50 bips move in bond yields. So we need bond yields to not go much higher, and also at the same point of time, expect that equity and bond differential stays very high, and we do not see earnings cut. I think that's a lot of things which are uncertain, and that's why I would say that not gunning for big returns, single-digit returns will be, if we scrape through with that, we'll be very happy with that. So there's going to be a period where things will go much cheaper, and then we can come back to hope for an up move. But net, don't think we're going to end with a very high number versus where we started this year.
Okay, all right. Hi, Vikas. Good morning. Good to see you in. You're sounding a little bit cautious, or a little bit would be an understatement. Worst case scenario, what do you think in terms of a downside from the Indian markets? We're 10% off the peak. How much more downside?
So let's not even take worst case. If you were to say that because of concerns of near-term growth, our valuations kind of normalize at 6.75% yield and assume that yields do not rise, which is, going to be difficult because that will mean US yields have to fall. Then even at that, just getting back to normalized differential versus bonds, we're looking at end of the year Nifty fair value at that scenario at 23,000. So even under that scenario, there could be downside for the market. So not really gunning, I think. See, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue. I would say if it's a very orderly kind of a correction and we scrape through with earnings catching up and valuations becoming more palatable, that's the best scenario one can imagine for the market.
Because those in it for the long term hold on and kind of hope to ride through 25 and look forward. I mean, that's the way for long term investors. But those more tactically oriented, are there anything things to do to protect the gains you've made, where you think we could see damage, take advantage of anything out there?
So I would say that most likely sometime during this year, maybe in the first half, we end up having a correction, and that could set us up for a great entry point for a lot of people, even the long-term guys, and even the ones who want to benefit on the long side once that period is done. See, first half is going to be very, very macro heavy. When Trump comes in, he's obviously not very predictable. What all does he do? What impact that has on the dollar? What impact that has on currency? Plus, we have our own,
Vikas, have you modeled that when you say correction in the first half? I mean, is there any way to say what are we looking at? We're at 23,600 or so right now.
Thankfully, I don't have to do that difficult a job of predicting Nifty every month. So that's why we typically take a 12-month view. So that's something which I think a technician, maybe our colleague Lawrence, can do a much better job with. But
so what is he saying? Is he in agreement with you? We get a first half swoon?
I think he's obviously saying that the charts are not looking that great for India. I think that's something which he's been maintaining. I'm sure you guys talk to him more often. So he'll be the right one to speak about that.
So possible 7-10% kind of a sort of, I mean, that would typically qualify as a correction. I mean, if it's...
We already had a 10% correction, Shant. So we actually called for it around October, where our India Bull Bear Index, the sentiment gauge gave us a signal around end September that this is at an extreme bullish point, and we called for that.
Okay.
But you're saying from here you get a bit of a correction, right? H1.
See, I am saying that because of the macro setup. I am saying that,
I'm just saying, I'm just confirming. And so
That's
then
right.
from here, what do you see? You've already seen 10, another, 5-7%?
So,
And then that's the entry point?
So if you see, we are at about 19.5 kind of a PE right now. If you were to go down another 10% or so, then that would take you to very close to where the mean reversion should be to go to historical average valuations. And given the way India is positioned over the slightly longer term, which looks much better than most other economies, if you get the market near historical average valuations for a multi-year period, that's a great entry point.
Vikas, just to finally complete the picture, I just want to put up that chart that we had on with the underweights and overweights that CLSA has, just sector positioning. They're underweight on a lot of things, IT, discretionaries, industrials, and even healthcare. The overweights are only commodities and insurance. So Vikas, as you sign off, commodities, and obviously the market took note of your call specifically on Reliance Industries, which came out earlier this week. Just leave us with some broad setup in terms of hiding places, because you sort of outlined the underweight sectors. On commodities, is it just oil and gas, or in general, are you expecting metals to also move up? Just leave us with the explanation behind that construct.
In fact, you missed one sector. Our biggest overweight is actually staples. So we run an India-focused portfolio, and for the last 4 years, I've tended to completely avoid staples. And this time, at the start of the year, we've actually made staples our biggest overweight, cut our overweight in banks to just above neutral. And commodities, we have 4 names. We have metals as well, and oil and gas names as well. So staples, I believe that that's really the big sector call, which we have taken very anti-consensus. The kind of underspend that we have seen on government capex, both at the state level and the central level, I think that is also maybe hinting us on government's changing priorities. If that happens, the investment and the capex-linked stocks are already overexcited and at elevated valuations. But if priorities change to more welfare, affordable consumption side of things, then that's the sector which is, pretty beaten down because it's not done much for a lot of time. That's why we believe that the realities of coalition government and the hints that we have got from recent state elections, plus the good rainfall that we've seen and the good sowing that we've seen, maybe just bring back that affordable consumption to to kind of life. And within staples, we like the food-related companies more.
All right. Vikash, great chat. And, let's book you for right after the 20th of January. Because I think we'll see. Reuters says over 20 executive orders on day one. And then we'll take it from there.
He's going to hit the road running, and that's why it's going to be very macro heavy.
Absolutely. Thank you very much. It's a pleasure, and speak to you soon again. Look forward to our next one. We'll take a quick commercial break here. We have the management of Signature Global to talk about the third quarter business update. So, real estate trends out of Gurgaon. We had one management from there in the morning, Ashiana. The second one, Rajat Kathuria of Signature Global. Stay with us.
Welcome back. Well, let's focus on Signature Global. That's the next management on the show. The company has achieved the best ever 9-month pre-sales of around 8,670 crore rupees. To discuss this, demand trends, debt reduction, and also a word on the Gurgaon market. Well, we're joined by Mr. Rajat Kathuria, the CEO at Signature Global. Hi, Rajat. Good morning. Happy New Year to you, your family, entire team as well. 2025 has started off on a good note for you because of these numbers that we've got. Now, a couple of questions on the past quarter, the past 9 months, and what's the way ahead. Earlier, you were talking about pre-sales of close to around 10,000 crores. Well, that's well and truly on. Give us a revised estimate. You can't keep it hanging in the balance now. You'll have to deliver more than that. So how much better can you do? And on collections, which was lagging, it was at around 3,200 crores. You had a target of close to around 6,000 crores. Both are achievable?
So thanks for inviting us to your show and many, wishing you two a very great year ahead. So, see, the core of our strategy has been to do mid-income housing. We want to be one of the leading or a very relevant player in the Gurgaon and the NCR market. In line of this strategy, we've been doing several new launches. We've done few good ones during this 9-month period as well and are reaping the benefits of the same. If you look at our performance through this 9-month span, every quarter we are doing a steady 2.5 to 3,000 odd crores of sales, which is because, we are able to create supply. So, supply creations leading to kind of demand creation is the trend which we've been witnessing. In terms of pricing, Gurgaon did see a bit of a steep rise over the last couple of years, but the price at which we've sold during these 9 months on an average is about 12,500 rupees a square foot. So that's also kind of, stabilizing at that level. We feel that there could be more inflation-linked kind of price rise from this point in time. So it's a good, healthy situation for the business where, the price movement is not very sharp. We have a good land position in the company, and we intend to continue with the strategy of doing more and more supply. And, since these are at very select locations, we expect, demand to continue to be moving in the right direction. In terms of our guidance, as if now, we are maintaining those numbers while we seem very close to the pre-sales target and still a bit of work to do on the collection side. But we are, as of now, maintaining our guidance for the full year.
Okay, all right. So pre-sales at 10,000 crores, collections at 6,000 crores, holding on to that guidance. Got it. A quick word on this Gurgaon market. Yesterday we had Knight Frank. This morning we had Ashiana Housing as well. The indications are that demand is plateauing out. What's your take? Do you believe the same?
So, see, you need to really break it down a little more. So, in terms of the current inventory and on a relative basis, there's no science to it. But let's say if one was to say that mid-income housing or prices on an average basis range between 2 to 3 crores. If you go up a little on the premium side, there is inventory available at 5 to 6 crores levels. And then, you can go above $1 million mark for luxury or, uber luxury products. So our firm belief is that, if you play the mid-income game, which is this average ticket size between 2 to 3 crores, and even for this 9-month span, our average inventory has been at about, 2.5 odd crores per apartment. This is a non-cyclical business. As much supply you create, there is much and more demand in the market. You just need to be consistent with the supply and be a kind of a company on which people have comfort and they're ready to trust you with their money, hard-earned money. So we feel there is much more to achieve in the mid-income housing segment.
No, I completely take that. Rajat, hi, good morning. Prashant here. But you're saying you're not seeing what Ashiana told us. They specifically said for flats above the 4 crore price tag, there is a bit of a tapering off of demand that they're seeing. And it's not as if supply is overwhelmed, but they're seeing that. So you're saying that's not something you're seeing?
So Prashant, our strategy remains that, you do homes which are in the current, income context and, capital values context are, affordable for people, while 2.5 crores is a good enough ticket size, but, since the income levels in the country have risen and Gurgaon sees a lot of, families who have incomes between 50 lakhs to 1 crore, per annum as a household income, there is a very strong demand if you can come up with units which are in the price range of 2 to 3 crores. And, we continue our focus in that segment while we are experimenting on other segments as well. But if anyone can do, this, ticket size product, I don't think quantum is going to be a challenge.
Okay, all right. Mr. Kathuria, I will leave it on that note. Thank you very much for joining in and giving us some perspective on how you see business playing out over the next couple of months. Well, moving on now, the electric vehicle race in the passenger car segment is definitely heating up. Mahindra & Mahindra, Maruti, Hyundai, JSW, MG Motors, as well as Tata Motors, all of them are gunning to come out with new EV models. And the Auto Expo is going to be, center of attention now over the next week. We have first Parikshit joining in with more details on what the announcements have been so far and what's expected ahead. Parikshit.
Well, the electric passenger car market is all set to heat up. The competition is going to pick up, and how in 2025. You've got the Mahindra Group firing the first salvo. They had announced prices for the starting variants of their new electric vehicles, the BE6 and the XEV9 at rupees 18.9 lakhs and rupees 21.9 lakhs. Now the company has announced prices for the top variants, which start at 26.9 lakh rupees and 30.5 lakh rupees respectively. Bookings start on the 14th of February. Deliveries will begin from early March onwards. Now, the Mahindra Group has packed in a lot of features usually found in top luxury cars. These cars have ADAS Level 2 Plus, which can detect animals and barricades on the road. You've got Auto Park with a remote control option, 360-degree camera, driver and occupant monitoring system to check driver fatigue, 16-speaker Harman Kardon Dolby Atmos sound system, and augmented reality heads-up display. So the company's strategy is to give you a power-packed vehicle, which is a luxury offering stacked against the likes of Mercedes, which has the EQA SUV at a starting price tag of 67 lakh rupees, the Audi Q8 e-tron at rupees 1 crore 14 lakhs, BMW iX1 electric SUV starting at rupees 67 lakhs ex-showroom. Mahindra has also tried to bring parity with top-selling internal combustion SUVs in the market. The B6 and the XEV9e are priced between 19 lakhs and 30.5 lakhs. Then you have the XUV700 from the Mahindra stable, and that is priced between 14 lakh rupees to 26 lakhs. For Creta, it is between 11 lakhs and 20.2 lakh rupees for the top variant. The Maruti Vitara costs between 14 lakhs for the entry-level model and rupees 20 lakhs for the top variant. And 15 lakhs is the price for the entry-level Safari SUV, and the top model of the Safari costs rupees 25 lakhs. So you are seeing that there is now some level of parity with the pricing between EVs and ICE vehicles. Now, with several electric cars being launched in 2025, there is bound to be a price war. Here's how others will stack up. Hyundai is launching the electric Creta at the Auto Expo, which is expected to be priced between 20 lakhs and 30 lakhs for different variants. The driving range for the e-Creta will be over 450 kilometers in a single charge. The e-Vitara is a ground-up electric vehicle being launched by Maruti. It is also expected to be priced aggressively between 20 lakhs and 30 lakhs across variants, and it will give you a range of over 500 kilometers in a single charge. Then you've got the Sierra and Harrier EV, which will be showcased at the Auto Expo. They will be launched in FY26, and they too will be priced very aggressively, and the range will be over 500 kilometers. So you are seeing very aggressively priced vehicles and a high range being offered by all OEMs. Already in 2024, we saw a lot of competition in the e-car market. Some of the top existing players like the Curve EV, which costs between 18 lakhs and 22 lakhs. You had the Mahindra positioning itself in this segment. Then you also have the ZS EV, which costs between 19 lakhs and 25 lakhs. The eXUV from Mahindra, which costs in the range of 15.5 lakhs and 17.69 lakhs. You've got the Windsor EV, which is doing very well, and it costs between 13.4 lakhs and 15.4 lakhs. Tata Motors continues to lead the electric passenger car market with sales of over 61,496 cars in 2024 compared to 60,100 EVs in 2023. Tata Motors has hit the sweet spot in terms of pricing as it offers cars like the Altroz EV, the Tiago EV, the Nexon EV, the Punch EV, the Curve EV, all in the range of 10 lakhs and 22 lakhs. But their market share has declined in 2024 to 62% from 73% in 2023. Now, this is because of competition from companies like JSW MG Motor, Mahindra eXUV, BYD, all increasing sales and their presence even though on a low base. 2025 could definitely be a turning point in electric car adoption in the country.
Okay, all right. Got that, Parikshit. Thank you very much. That's, very, very helpful and sets the stage, sets the agenda. So let's take the conversation forward now. Harma Sorabji, editor, Autocar India, as well as Jay Kale, who tracks the auto space at Elara Capital, are both joining in. Gentlemen, good morning to both of you and season's greetings. Wish you a, Happy New Year. Hopefully it's been a great start. Horma, so there you go. I mean, Parikshit laid out some of that excitement, and we've seen the headlines come through already, right? With M&M announcing the bigger battery packs and the pricing, I mean, cars for going up to about 30 lakhs, so on and so forth. But I want to hear from you, because there's so much anticipation about Maruti finally unveiling its, EV plans as well. What are you expecting specifically at the Auto Expo? What should we watch out for in this big EV passenger vehicle fight?
Yeah, well, I think coming to Maruti, number one player in the market, still hasn't got an EV, while others have. So clearly, I think a lot of anticipation from the e-Vitara, which they're planning to launch. I think what's important to know is that this is a global product. I think 50% of production is going to be going to Europe and back to Japan as well. This is a product that's been developed alongside with Toyota. So really, close collaboration with them on this. So I think you can expect, a product that is quite sorted. It will deliver on the parameters it's expected to. What we hear is they have faced some delays in getting it to market. It was supposed to be, I think in March, it might be now pushed to a...
Oopsie.
Uh-oh. I think we've just lost Hormaz there, so we'll... Hormaz, I think we'll... Yeah, we can hear you. Let's try it again. We lost you there in between. So if you could just repeat that point.
Sorry, is this better?
Yes.
Yeah. So I was just saying that the e-Vitara is a global product from Maruti Suzuki. It's a kind of collaboration with Toyota. You'll have the Toyota version coming. It's a lot of export potential for this product. In fact, 50% are for exports to Japan and Europe, and of course in India as well. So this is really a global product that's coming out from Maruti Suzuki. But I think really the one that has really swept everyone on and given a proper electric shock to the competition and the market is what Mahindra have done with their BE6 and XEV9e. Clearly, as Parikshit said, in terms of spec, in terms of design, in terms of performance, it's just hit it out of the park. So that's what one is expecting, from Mahindra, and a lot of other EVs coming. I mean, I foresee the EV market or doubling in 2025 at the least. So I think you will see a penetration jump from what is around 2% to maybe even 4% going forward in 2025.
Okay, got it, Hormaz. Thanks a lot for that. Well, Jay, let's get you into the conversation then. What are you factoring in terms of number of units that Mahindra and Mahindra can sell from its EV basket? The pricing is very, very attractive. The market lead, I think last year, Tata sold roughly around 64,000 units. You can correct me on that number. So how much can Mahindra sell on a monthly basis? Can they do 5,000, 6,000 units, more than that?
Yeah, I mean, I think, good morning. And, like Hormaz said, I think they've really hit the ball out of the park, Mahindra, with their BEVs. I think very attractive pricing as well as, loaded with features. I think the design element is something to be talked about. It's definitely a head turner. And I think that, in BEVs, the problem is, of course, charging infrastructure, etc., has been an issue. But until and unless you give the customer that aspiration to own that vehicle, to kind of move away from the inconveniences of charging, I think EVs are not expected to pick up. And what Mahindra has done is given that customer that aspiration to own this kind of vehicle. So I think despite the inconveniences of charging and the issues that we see with the EVs, I think we are expecting a pretty good volumes from Mahindra BEVs going forward. I think they've recently announced the top-end variant pricing as well. The bookings are expected to open up from February. We hear of a pretty good response on ground for them. So definitely, in what we are factoring into our numbers is definitely more than the 5,000-6,000 that you mentioned per month basis on a sustainable basis in the next few months. They have a eventual capacity of around 10,000, which of course will be taken up further in FY27 as well. So yes, definitely, this is the year where you could see the EV penetration, which has been lagging quite a bit in the last few months, should kind of take off with incrementally so many launches coming in. I think the new model launches were pretty crucial for the EV segment to take off from here. And I think we are seeing that inflection point correct.
Okay, so perhaps higher EV penetration as the fight heats up. Hormaz, so if I were to ask you about the top 3 automakers that you'll watch out for that will start winning this domestic EV fight, which would those companies be?
I think definitely Mahindra, has got a lot of, let's say, interest. It's, I think, as Jai was saying, that people will kind of, forget about the slight inconveniences of the charging infra, which still remains a big issue. And fundamentally, it's home charging, not so much the public charging, because home charging is really where, people want to charge their vehicles. That's where the convenience is. But I think, people are going to kind of, let's say, looking at the design of something like the BE6, people are just going like, wow, and they want to have it irrespective of what the powertrain is. Pricing is also very, very good. So I think, it's looking really good for Mahindra. I would say that they're on a very, very strong wicket with their 2 products. Again, it has to hit the market. They have to make sure that they are reliable. Software glitches, which is quite common, even in Mahindra vehicles, they need to sort that out. They've got a lot of tech in there. They've got a full new Ethernet-based, electronic architecture. So it's very powerful, very sophisticated, but at the same time, it needs to be stable and sorted out. So I think that's what they'll be working on. I think Maruti Suzuki, just by their sheer size and their sheer penetration of their network, they'll pick up some good numbers with the e-Vitara. Not sure what they're going to price it, but I don't think it will be super competitively, because I think what they are banking on is their global quality standards to kind of, let's say, appeal to customers over there. Same with the Hyundai Creta. Creta itself is the best-selling SUV in its category today. It's about second or third best-selling car in the market period. So when you get an electric version of that, you will automatically have, substantial numbers. You can't rule out Tata Motors, but I think Tata Motors will be under pressure for EV market share this year. They've dropped, as we've seen, to 62%. They've got the Harrier coming out, and they've got even the Sierra. But I think, they will face some stiff competition in 2025 for sure, which is turning out to be the year of the EV.
Absolutely. Got that, Hormaz. Thanks very much. Jay, very quickly, what are your top buys in autos right now, in four-wheelers?
Yes, in four-wheelers, it's of course, you have Mahindra and Maruti are the top buys in four-wheelers, and in two-wheelers, it's TVS and Bajaj.
Okay. All right, gentlemen. Got it. Thank you very much for stopping by for that quick chat on the battle of the electric SUVs, should we say, or not just SUVs, the battle of the electric cars in the Indian market. Let's take a very quick break. Come back on the other side. We'll have Manisha Gupta joining in, and we'll get you more on the commodities markets. Welcome back. So the equity market's actually quite okay. Mid-caps have recovered. Let's find out what's happening in the commodity universe. We have Manisha with us in the studios now. Manisha, so what's catching your attention?
Well, the commodity markets are also okay. Thank you for asking. But copper really seems to be doing quite well. If you look at the overnight markets, well, we've gained nearly 2% within that. In 2025 so far, as you can see, copper really seems to be outperforming the overall metal space with 7% of gains. And in 2024, we saw the prices gain up by 5.5%. So it has been good going for copper. The last year, it wasn't the best performer, but this year, it definitely is determined to be the better one. And we've seen that in way of prices as well. So from a 5-month lows that we saw in December 2024, we have seen a smart rebound come in for prices. And we're trading at a 3-week highs at this point in time. Actually, in the last quarter of 2024, the copper prices declined by 10%. And that really seems to be reversing all of that at this point in time. Well, the strength clearly comes in from the China stimulus expectations, and more projected, more inclined ones is what the street is anticipating right now. Apart from that, the rapid adoption of EVs, I mean, you were having that discussion right now, those numbers look good as well. And the renewable energy numbers also are starting to stand up as we start 2025, and the projections therein, that sentiment also seems to be supporting copper. The refined production numbers also are expected to be on the weaker side because of the lower TRC numbers that we've seen come in for this quarter. From $35 a ton in the last quarter of 2024, it's $25 for the first quarter of 2025. 2025. So that tells you that the refined production perhaps could be on the lower side. Markets also are looking at and trading at a premium. If you look at the China copper premium, that stands at $70 a ton right now. It was $43 2 months ago. So markets are looking at Chinese coming back to buy copper as well. The UBS report that came in yesterday has been quite interesting. They expect the copper demand growth for 2025 globally to gain up by 3.2%. I mean, that's your cue and the reason that you saw copper prices gain up quite strongly. When you look at 2025, we have more banks and brokerages now upping their forecast for copper. UBS, for one, in their yesterday's report has come out with $11,000 a ton of an expectation. And you have 10,000 to 10,400 coming in from JP Morgan, Goldman Sachs and Citi. And then around 10,000 is what you have the other banks and brokerages also putting that out. So the likes of ANZ's talked about 10,000, Bank of America and ING are talking about, again, 10,000, 9,500 to 10,000. So we are looking at higher numbers here. Currently, the copper prices are trading at 8,800. So from those kind of levels, as you can see, it's a lot of bullishness that 2025 could show you for this metal.
Okay, all right. So it's all about copper. Manisha, thank you very much for all the highlights over there. We need to take a break. But on the other side, our special segment, Market Masters. Today, Lata is in conversation with Anish Tawakli of ICICI Prudential Mutual Fund to talk about the market's way forward once we get through the Donald Trump swearing-in ceremony later this month.